This is a good investment and this is not. When I look at this, all I see is red flags. But how can you tell the difference? Spotting these red flags is what separates those who make big profits in real estate from those who walk away with nothing. Hi, I'm Masroor. Last week, I helped one of my investors avoid a massive 100,000 loss, all because they almost ignored these critical red flags. And in this video, I'm going to share 5 red flags you have to avoid when investing in Dubai real estate. Starting with the location. Everyone knows real estate boils down to one thing. It's the location. It's not just about where a place is. It's about whether that place is growing. Here's the thing. Most people, they miss something very critical.
You calling me stupid, Larusso?
When they see big price jump, they assume it's a real growth. But often, it's just smoke and mirrors. Let me break it down for you. Take Dubai Marina as an example. If you look at a graph of average price growth there, it's impressive at first glance. Between 2021 and 2023, the prices go up by 65% over 2 years. Then in 2024, they dip by 9%. So you might think, wow, if I bought an apartment for $1 million in 2021, it would be worth 1.5 million now. Sounds like a no-brainer, right? Not at all. That massive spike in 2022 and 2023, it wasn't organic growth. It was driven by new off-plan developments. Now, strip those off-sales out of the equation and focus on secondary market resale properties. Suddenly, the graph will tell you a different story. It will have no wild lapse and crashes. Just steady, modest growth in line with the broader market. I know, it's not a perfect method. It's a solid way to analyze an area's true trajectory. When you apply this lens, you'll definitely gonna spot areas that look like trouble, and often you should stay away, but not always. What really matters is what will be going on in the area in the near future, but I can't really say the same about the next red flag. The red flag number 2 is big delays. 2 important notes before we dive in. First, even the best developers, they can have delays. It happens for various reasons, and if delays are rare and relatively short, it's not a huge issue. Second, some buyers, they don't actually mind delays, especially those who are stretching their budget with a payment plan. For them, a delay means they get more times for the payments and it's beneficial for them.
Because I am smart.
That said, delays can seriously impact your investment, particularly if you're buying for rental income. Here are the things you have to watch out for. Number 1, what is the initial completion date? Sometimes project seems delayed simply because the construction time was longer. For example, Opus by Omniat took 9 years to complete, but that was the original plan. Second, who started the project? Not all delays are caused by the final developer. In some cases, another company started the project and failed to complete it within the timeline. Take the Pentominium in Dubai Marina for example. Construction began in 2008 but stopped after 3 years. Many years later, Select Group bought the plot at auction, rebranded it as Six Senses, and restarted the construction in 2023. At first glance, it might look like the Select Group has been working on this project for 15 years, but in reality, they just took over recently. Okay, now here's the question. How to avoid these red flags? These and other red flags are much easier to catch when you have the right expertise and data-driven insight by your side. If you're planning to invest in Dubai real estate, my team can help you completely free of charge. And also my team will find the best property for your investment, analyze every key detail, secure the unit, and support you through the entire process. Real estate investment is a strategy, it's not a gamble. Before investing, do your research, analyze the market, check the developer's track record, and most importantly, choose the right project early on. We work with Dubai's top developers and have exclusive access to insider information that most investors don't. With a network of 100 plus serious investors, we know where the best opportunities are. If you're serious about investing in Dubai real estate, click the link down below and book a call with us today. We'll help you find the perfect project based on your budget and goals. Let's get back to the video. Red flag number 3 is overpriced. What does overpriced really mean? A project or unit can be considered overpriced if another property of the same class in a similar location with a comparable size, views and layouts either currently available or recently sold with a lower price. To make things simpler, here's the better question. Is there a better investment opportunities for the same money? Let's put this into practice. This is Dubai Island and you're looking for a property with the best value appreciation potential. Project A is in this location. It's a standard building with basic amenities and is a 10-minute walk from the beach. A 1-bedroom unit with no views is priced at $610,000, which translates to $680 per square foot. For a slightly lower price of $580,000, you could get 1 bedroom in another project This one is within the same walking distance to the beach, but it's fully furnished, larger in size, and the developer has a better reputation. And the price per square foot is $550, which suggests Project A is overpriced. Project B seems well priced, meaning it's worth digging deeper into its detail and decide if it's truly a good investment. And that's exactly what we do in this channel, breaking down the most interesting new launches and everything about real estate in Dubai. You can check out one right here. Alright, should you trust a developer with no track record? Well, I wouldn't. And that's red flag number 4. A developer who doesn't have any evidence of their work. It's not that you can buy from a developer who's working on their first project. So, what kind of evidence should you look for? Number 1, experience in other markets. If a developer has completed projects in India, the UK, Spain, or other countries, that's a very good sign. However, don't take everything at face value. Dig deeper. Are those projects similar to what they're building now? Do they have positive reviews and good reputation in those countries? Have they completed projects on time and as promised? Some new developers start as a contractor before launching their new project. This means you can check their previous work, but be cautious. Number 3, the background of the management team. A developer's credibility also depends on who's running the company. If the executive team includes former top managers from top real estate, that's usually a good sign. That said, just because a developer has a great track record doesn't mean every project they build will be a good investment. Some projects simply will not perform well. And that bringing us to the next red flag, number 5, low rent to price ratio. Rent to price ratio is crucial for anyone looking to invest in a rental property. You calculate it by taking the average rental income and dividing it by the average property price. This isn't the same as yield since it doesn't factor in operating expenses, but it's a quick way to assess whether a rental property is worth it. In Dubai, the average rent to price ratio is around 4 to 5%. In some areas, offering 6 to 8% only for certain types of properties. Sometimes you come across red flag. Take this Dubai neighborhood for an example. The average rent here is around $24,500 based on actual transaction data, not listing price. The average apartment price in the same area is $900,000. When you divide these numbers, we get a 2.7% rent to price ratio, which is well below the city average and a major red flag for rental investment. Some might argue that the area will improve, demand will rise, but here's why that's risky. Number 1, dramatic changes would be needed, like transforming empty land into parks, shopping malls, schools, bus stops. Second, the numbers don't add up. For this area to reach 7% rent to price ratio, 1 bedroom apartment would need to rent for $36,000 per year, which is comparable to Creek Harbor and double the average in JVC. What do you think about these red flags? Drop your thoughts in the comment. And if you're serious about securing your future here in Dubai, don't miss the video right here where I broke down the golden visa in Dubai and why it's the best option for investors. So that's it for today. See you in the next one.